What's going on, guys? Welcome back to the channel. This is Shocks and this is Shocks Capital FX. If you are new here, consider subscribing to the channel so that you don't miss any video, and smash that notification bell icon so that you don't miss any video and you'll be the first to watch when you upload content like this. I'm excited, guys. Today we're going to talk about the best V75 strategy which you will be using in a short time. So guys, thank you. Let's go right into it. So this is a V75 chart. First of all, we are going to be using a naked chart for our analysis and for our strategy to really stick. So this is a V75 chart, and guys, if you don't know what Volatility 75 index is, it's a synthetic index. It's offered by the broker called Deriv. So if you don't have an account with that broker, you can't be using this strategy. So the only way for you to benefit from this strategy if you don't have an account is to go in the description down below, register with Deriv, and come back, watch this video, go back and kill the broker. So guys, let's go right into it. So guys, here we are going to be looking at market structure and order blocks to trade volatilities. We are only going to be using the M15 time frame, and from the M15 time frame we are going to be analyzing where price is going. So number one, we are going to be analyzing the market structure of the volatility index, and from there we are going to be identifying our entry points from that specific market structure. So first of all, guys, let's look at this day beginning here. Let's look at this day beginning. We have our volatility chart moving like that, and if you look to the day before, what we are seeing is a bullish market structure where we are having a series of higher highs, like that being presented in the market. So when this day opens, you will see that we have broken this high and made a new higher high, and from this you are only concerned about what is going to happen next, and what is going to happen next after a break of a prior higher high. So a formation of a new higher high will lead you to look for entry points or to look for order blocks. If you don't know what order blocks are, check out our video on this channel which talks about order blocks, then come back to this video and really understand what we are talking about here. So when this market breaks like that, you are looking at order blocks responsible for the break of the higher high. So this is the higher high which has been broken or which has been taken out to form a new higher high in this area. So you are looking for a strong zone responsible for that, and if you look closely, you see that this is the last red candle responsible for that. But would you use that? No. Why? Because you are having it as, you are not going to be using this candle because it is not an original zone. It formed after a retest of this one, so we are not going to be using this zone. Why? Because of that reason. And you are not also going to be using this one. Why? Because it didn't break market structure and it's not a fresh zone. So the only zone which we are going to be using here is this one right here. That's our order block in this case. So you'll be waiting for price to come to that zone like this, and you'll be taking your trades there. Let's look at another example. The day begins here, so you're looking at day beginning like this. So you're looking at day beginning and see where price is going, and when the day begins, it breaks this market structure. When this low breaks, you are looking at points above your break of market structure. You are looking at the price action above your break of market structure. So in this case, we're looking at this zone. This is the price action above this one if you want to go short. So what you are going to be seeing is this break was caused by this candle here being our order block. So what you'll be waiting for is after the break, you wait for a retest. Your stop loss, guys, you know it goes above your supply zone, and you are going for what, 1:3, 1:10 risk reward ratios, because the stop loss is very minimal and the reward is very big. This is what I love about this strategy. Let's look at another example. Let's say you miss this trade. What are you going to do next? There is a break in market structure again here, and there is also a break here. Market structure is being broken as price is moving down, and you are waiting for your entry. When this breaks, you are waiting for price to come back to your order block like that. And as you can see, price didn't really touch that OB. So it's a new day. What are we seeing? Price is broken market structure to the upside. So what are we doing? We're drawing out our order block responsible for that break and waiting for price to come back. And we want to see price coming back that particular day. And as you can see, price didn't come back this particular day. The next day, we are looking at day beginning. Then what happens after that? Breaks in market structure, low, and you are looking at a retest of an order block. You enter here. Your target is always the opposite OB or the opposite high or low, depending on where you are going. So guys, what I want you to really get is this. Let's consider this for a while. What I want you to get is, if we are beginning a day like this, you'll be having a low and a high to break. So whatever breaks first at the beginning of this day is your direction which you'd want to trade for that particular day. So price is moving. This is V75, then breaks the high. You know, when it breaks the high, you have what we call market structure break. And after that, you're just looking for an order block in this zone for it to test and go up. And if it's the other way around, where you are having price breaking the low, where you are having price breaking the low, this will be your market structure break. Then you are waiting for price to come back to an order block in this zone, and you are going that direction. This is how you are looking at price. Let's go back to the charts. This is the day beginning. Day beginning is here at our red line. Then what happens? What breaks first? It's the low. This is what breaks first this particular day. Price comes back to your demand zone, and you are entering there and targeting the highs. You are targeting the lows. Why? Because we are going down. If you were going up, we will be targeting the highs. So your take profits are these highs as you go down. So this is a very simple strategy which you need to be using at every day beginning. So what breaks first is the high. Then when the high breaks, you are looking for what? You are looking for a retest of an order block. So the fundamentals are the same. You want to see price breaking either a high or a low of we are talking about a market structure high or a market structure low here. When the day begins, you will be having a market structure high and a market structure low at a particular time, at a particular moment. So what you need to be seeing is a break of either of the two. When it breaks a high, you are looking for buys that day, and when it breaks a low, you are looking for sales that day. So this day it broke a high like that, went up, then come back, retested it, and you are going up. So your safest take profit is the first high, which is this one. You have hit your take profit, and into the next day, what breaks first obviously is the high. As you can see here, breaks the high, came back to the order block, and you are going up like that. The next day, what happens? It breaks a low. When it breaks a low, it comes back to a what? To an order block like that, and price continues doing that. So V75 guys does this every time. If you go study it, you see that I'm not faking this. I'm just scrolling past the V75 chart, and you are seeing as I'm going. This is the M15 chart, and you can be using this with you guys. So what breaks first this day? This is the day beginning. What breaks first is the high. What are we waiting for? We're waiting a retest of the what? Of the order block. Look at what it did. So this day we had two trades. We had we had this one from the previous day, but look, we were going down to our order block, but we were also waiting for another trade. We have broken market structure here. This is the beginning. What breaks first is the what is these lows, because we are having a structure high, which is this one, and a structure low, which is this one or this one, depending on which you want to use. So what breaks first is the low, then price comes back to what? To your order blocks, to your strong order blocks in that zone. Day begins, this breaks the high, but this day would have encountered a loss. I'm not saying this is a holy grail that you will not lose. You lose, but the win rates are amazing. So what you are doing is break off a high, come back, and this you would have hit your stop loss. But the next day you would have come back and took what the market would have taken to you this day. So this is what you are doing, guys. This is what you are doing. This is a break. That's the first break for the day, and you are just looking at that like that. So that's market structure. You are analyzing market structure like that and trading in line with the market makers like that. So this is V75. This is a simple strategy which you can be using as we go